with Rachel Stempski. How's it going, Rachel? Can you hear me okay? Give me a second here. I'm having a hard time hearing
I
your
can.
audio there. There we go. I can hear you now.
Okay, perfect.
So thanks so much for I know you're on the road. I know you're super busy. So today we're going to talk about private mortgage investing 101. And the reason why, I've reached out to, Rachel about this is because there's so much, uncertainty going on right now. With the mortgage, and resident and real estate space, people aren't sure about which, mortgage products are best. What should they do? And what we're finding a lot of people are gravitating towards alternative sources of financing in order to be able to fill that gap until the market settles and people are understanding a little bit more about where mortgage rates are going. Certainly, it's harder to qualify, for a mortgage than what it was even as little as a year ago. So, we also have a lot of people reaching out saying, "Hey, we have some money. We'd like to be able to be a private mortgage investor," and with that comes a lot of responsibility. So, Rachel is a rock star. She understands, the space not only from a real estate perspective. So let's dive in. So Rachel, tell us a little bit about yourself and more importantly, how you got into real estate and also becoming a private mortgage investor.
Was a lovely introduction. So I don't really have a short answer to that. 21 years old. I was licensed at Remax. I've been there for 18 years now. And I think it's just been a natural progression. Selling. I purchased my first place at 22. I enjoyed being a landlord and long-term investments at first. Then I started some Airbnbs and some flips, lending, and now we're kind of rolling into attempting to sever some land and build. I think it was just along the road of the natural progression of things. I know everyone kind of starts somewhere different but I started with long-term investments and then it moved over to lending side of things.
Okay, so with private mortgage investing comes a lot of responsibility, and I know that you are a great resource for not only people that are in your community, but also because you're an awesome person, you're willing to have conversations with everyone, just about the space and helping them understand what it's like and what they're getting into. So, are there any requirements or qualifications to become a private mortgage investor?
No, you have to do your own education, but essentially it's so there are no per se, but everything's on you. You're using your own money, so it's your own liability through your RSPs and your tax freeze. There are a few banks that allow it. Is one of them. Olympia Trust is one of them. Canada Western Trust is one of them, and then other people have a larger investor in some of the larger banks. They'll allow you to do it. I haven't had any experience with those. We use a lot of B2B, Olympia Trust, and then Canada Western Trust as well. Trust is my number one right now, just because they don't make you leave a cash portion in the bank. They really let you govern your own mortgage kind of however you want to. So you have the most say in, as I understand, with Olympia Trust right now.
So Rachel, so you brought up a really interesting point. So, you can, there are some trust companies, as you mentioned, that still allow people to hold private mortgage contracts within their registered investment vehicles. So RSPs or TFSAs. And then so clearly what they're doing is they're acting as an administrator for, that file. Technically, it is still your money. You're the lender. You can say yes to it, no to it, what the terms are, et cetera, et cetera. It's just the trust companies administering on the back end that fund for you to ensure that you're compliant, that the money is going back in there as far as your rate of return is concerned, et cetera. And then the other side to that is that you may have people that have cash holdings and they don't have money in a registered vehicle, and in that instance, again, the same rules apply. It's just they're administering that on their own. Is that correct?
Completely on their own. So whereas we need a purchase and sale agreement or an appraisal within the last year, it's your own cash. You have the at your fingertips. You can say, no, I've been into the property myself, or my real estate agent went into the property. I'm comfortable lending on that.
So Rachel, what would you say some of the primary benefits are from becoming a private mortgage investor?
Well, you're in charge. Like, you get to choose your rate of return. volatile as I'm concerned as the stock market or investments, whereas, the market's going up, the market's what your rate of return is going in. So if you're saying, I'm charging a $2,000 lending, my fees, and it's going to be a 12-month term, you can make it payable at 12 months, or you can allow them to get out early. You get 8%, 10%, 12%, whatever you choose. So if the market's up and, and 18 and 20% on their investments, well, you're not. You're making what you chose, 10 and 12. When other people are making 3 and 4% in the market, you're still making 10 and 12%. So I like that. I feel like I'm gambling less. I feel like I'm in charge of my own fate, my own destiny, the process with that, but I'm not a gambler by nature. So I like knowing that this is the investment. It's very safe.
So it also sounds too, sorry to interrupt there. It sounds like because you're so comfortable with real estate in general, because you've been doing it since you could walk, that really an investment that complements an industry that you're super comfortable with really makes a lot of sense for you because you understand it, correct?
For sure. I'm a one-trick pony. Real estate's.
I wouldn't say that, but yeah, okay. Okay, so it also sounds like this might be a really great way for people who are looking maybe diversify their investment portfolio if they don't want to put all their eggs in one basket, or as you pointed out, they're not really happy with their rate of returns on a certain thing. If it's maybe a little bit too conservative for them, they may choose to diversify a little bit and say, hey, let's take a chunk of this money, put it into private mortgage investment because I also like the industry. I like the community. I understand real estate. Is that a fair statement as well?
Absolutely.
Okay, so let's talk a little about the risks, okay? Because obviously there's a lot of risk, and let's kind of pick on a couple of really key takeaways that you could advise people to say, listen, at the end of the day, this is what you should really consider, before you enter into becoming a private mortgage investor. What would that look like for you if you were going to give somebody that advice?
So earlier, like 3 things somebody might need to know, and I was thinking it's not 3 things you need to know; it's 3 people you need. A very good lawyer that would help administer things and make sure that they are doing you on the mortgage instead of TD. It's showing as Steve Daynard. When it's through the registered Olympia Trust operating as Rachel Stempski, like it's nice to that's going to have everything facilitated properly. And then if anything ever goes bad, you have me. So you need a lawyer, you need a mortgage broker like Steve Daynard to be able to say, hey, I really met these good people. They're looking to flip their first property. They found one they like, principal residence on the line as collateral. Would you be looking into that? They're looking for this much money. Mortgage broker, and then a realtor or an appraiser who can go into the house physically and say this much. So I know a lot of people probably don't realize it goes on, but you can get an appraisal, and it's not always accurate. It's not always accurate as of today's market. Sometimes the appraisers, particularly during COVID, they were being done by borrower themselves, was taking photos of their property, and they're not necessarily as accurate as you want. So you or an appraiser to physically go in the house themselves and say, I've seen the house, it's not falling down as much money. And then at least if they want to borrow $100,000 on the first mortgage, $100,000, but we know the house is worth $500,000, you can confidently, the lending is like 40% of the value. It's an absolute no-brainer. Your risk is, for goodness sakes.
Sure.
But you need the lawyer, the mortgage broker, and the real estate.
So one thing you mentioned earlier, which kind of, zeroes back into what we just discussed here, is just said, you're in total control. You are the lender. So basically, if you're not comfortable at any stage of the transaction, if information comes forward as part of the review of the property or the review of the borrower's, creditworthiness, et cetera, you can say, you know what, I'm stopping this. I'm not comfortable with this. It exceeds my risk tolerance. I'm not willing to kind of put my money out there. So what I like about this is that, as a private mortgage investor gets a little bit more familiarity with putting their money out there, they start to learn a little bit more about what that looks like. So at the start, people should look to try to be very conservative, make sure they're going for strong deals. As you said, lots of equity available there. The risk of them potentially you losing their investment or losing money on that, you want to try to minimize as best as possible, right?
For sure. And I mean, I've taken riskier deals where we're almost at 90%. I wouldn't have given it to any of my friends because I
Mhm,
don't
mhm.
facilitate for well. But I took both. We were the second mortgage holder. So we essentially had to go power of sale to flip the house, essentially.
Yep.
But what you're getting into, it was the riskiest one. And I said, it's risky, but there's money to be made there if it went south. And the gentleman and recoup his losses, he couldn't, and he just walked away with a wash. We still
But Rachel, how many deals actually get into those situations? I mean, that doesn't happen on every transaction, right?
never. So that's been one in my life now.
Right.
I use 1,000 for a lawyer. Typically, he said the same thing. 50 years go bad,
Yeah.
and saying
Yeah.
he knew from the start that it was the riskiest one I ever did, and
Sure.
you going in, and a lot of people who are looking into the private, some of them have little experience, but a lot of them have like a lot of experience, and they're saying, I do have this cap by another house with, but I just don't have the time for another house right now. So where can I put
Mhm.
my money that's going? And that's a perfect place for it, right?
Fantastic. Awesome. Okay,
Also,
so just to kind of recap here, sorry. So just to kind of recap here, so there's some great flexibility here. If you're looking at trying to be able to, diversify, your investments across, multiple learning opportunities, that might be an option for you. But the major takeaways here is that there are a higher level of risks, and it's really important you have a team to be able to support you, especially when you're learning, to be able to guide you, through this process. And as you get more familiarity with private investing, you'll be able to understand, the lingo, understand the risk, because a lot of them are, pretty standard as far as the application is concerned. Does the person have the income and the credit in order to be able to, make the prepayment, those type of things. So I really love, what you said about that. So any other final words you'd like to add? I don't want to take up too much of your time because I know that you are a mover shaker and you're always on the go. And again, thank you so much for your time. I really, really appreciate it. Any other final words?
no, if
Okay,
anyone's looking,
awesome.
definitely the mortgage broker for them.
Awesome. Okay, well, great. Well, listen, so thank you so much for your time again. As always, you look
Thank
absolutely beautiful. Say hi to the family for me. And thank you so much for being a part of our live stream today. And we'll talk to you later. Have an awesome day.
Thanks, Steve.
Take care. Bye now.